So let's talk about credit ratings. Let's start first with what are they, why are they important, and then we'll dig into how it works. So the credit rating is basically one of the things that lenders will look at to determine whether they trust that you'll pay back the money they want to lend you. And so what they've done is they have these centralized places that collect all your payment history, and they look at a bunch of factors, kind of an algorithm situation. And from that, they really decide, give you a number, and that number is what one of the things that is used by lenders to decide, hey, yeah, let's give them they're eligible, let's give them this good rate, or you know what, they're riskier, so let's make them pay more money, or worst case scenario, yeah, we're not going to give them a loan based on that credit rating. So that's why it's so important that you care for and nurture your credit rating. And so in terms of how it works, in Canada there are two major credit bureaus, if you will, that track and report a number. They are TransUnion and Equifax, and different institutions use different ones of those. They'll use one or the other, and also how they calculate your score can be different. So it's kind of a good thing to be looking at both of them and seeing where that goes. So how does it work? Well, the score can be as low, very low, and go up to 900. Now, I've only seen a few people in the 800s. It's super hard to get to that level, but basically what they're looking at is a number of things. First off, they're going to look at a little bit of your stability. Have you lived at the same address for a period of time? Have you had the same job for a period of time? These things are some subtle things that are looked at and taken into account when they are calculating your score. Of course, they're going to look at the lines of credit you're carrying. And it's interesting, some lenders will report to the bureau and some will not. So basically what happens is almost all credit cards, cell phone companies now, for a long time, cell phone companies did not report to the bureau, and also sometimes mortgages report, sometimes they don't. And what that does is it all gets put up and it rolls into a data integration. And for different lenders, they could be reporting on different time frames. A lot of them roll it up at the end of the month and send the data off to the two bureaus for calculations. So they're going to look at how much credit you have. And so if you had, $10,000 worth of credit on your bureau and you're using the full 10,000, they're going to call that 100% credit utilization, and that can negatively affect your score. So what you want to do, if possible, is look at the total amount of credit you have and try and keep down under 50%, ideally in the 30% range if you can. Also, the number of inquiries that have come in on a bureau can start to affect your score. So if you're shopping for a car or you're visiting a number of mortgage brokers, each one of those people are making an inquiry to the credit bureau, and that will show up. And then if you do too many in a particular time, that will adversely affect your score. And I think the reasoning in behind that is if you are in a position where you are not very financially solvent, then you may be shopping for more pieces of credit. And they will kind of rank at some level the types of credit you have. So if you have a payday loan versus a line of credit, that can affect how they're looking at what you have going on and affect your score. So really, we're also looking at your payment history to make sure that you're paying on time. If you miss a payment, that gets reported to the bureau. And so that gets reported to the bureau, and what you really want to do is have regular, reliable payments of the minimums in a timely fashion to prove that you're creditworthy. So when it comes to your scores, basically I look at the three levels. There's under 650. It's going to get a little more dicey in terms of what you get offered. 680 seems to be the number that a lot of mortgage providers will give you their best deals when you score a 680 and above. And of course, if you're in the 700 territories, everyone loves you. So that's really, really good. Now, in terms of keeping up with your credit bureau, so you can go and log into Equifax and TransUnion and get your report. What they've done though, a lot of times is if you want to get an actual number score, they're asking for you to make a payment. But there are a couple of fintech type companies called Borrowell, BORROWWELL.ca, and creditkarma.ca that you can go in, sign on to, and get free accounts to check your score and make sure that what is being reported to the Bureau is true and accurate. What you don't want to do is find out that something is awry with your credit bureau, meaning maybe something's not right. Something that you paid off hasn't been shown up as paid off. Something, or even worst case scenario, that somebody is using your credit score and has kind of done the identity theft and is really racking up stuff and it's not yours. So I recommend that you check your credit bureau on the regular. Minimum would be once a year to double check. And if you know you're going to make a really big purchase or look for a loan of some sort that's fairly large, you're going to want to start looking at that a few months in advance to make sure that you can change things, or even longer, because to get something changed and pull the proof together and everything can take some time to get your credit bureau adjusted. So that's in a snapshot how to think about your credit bureau. Make sure your credit score is nice and high, maintain it. It will affect everything. And in this world of integration, we're seeing some things that, not necessarily here in Canada yet, but they're coming, about your credit bureau affecting some of the other parts of your financial life. So it's really important that you stay on top of that and go forward and check on the regular, make your payments, and double check everything.